All right, what's going on, guys? Good evening. Bitcoin made a nice, juicy move today. That's what you want to see, guys. Nice, healthy move, followed by a potential healthy correction to the downside here. We're going to talk about it. We're going to see where we think it's going to go, and so much more, guys. It's going to be an action-packed live stream. Let's go. First off, let's get into the super chats. What do we got here, Ken? Hello, fellow cryptards. Super chat to start. My guy, my dude. Isaac, my guy. Sup, Rob? Thanks for all you do, brother. Hey, thanks for being with me this whole time, Isaac. One of the OGs of the channel. My dude. Thanks for always supporting the channel, guys. Thank you so much. Let's get into the chat. Not very busy chat tonight. Holy smokes. Perpetrator, what's going on, man? LFG. I'd super chat again. However, I'm unemployed and bank account is minus $500. Hey, I appreciate just being here, clicking the like button, and making a comment. That is support enough, my friend. Absolutely. Absolutely. Jared, what's up, man? Even when life gets me down, I just got to look at my now growing again portfolio. It's the small things. That's right, baby. That's right. It's me, Mario. What's up, man? What's up, Pentelnex? Senior Future Goofs. Good evening, and thank you for keeping us informed. Hey, absolutely, man. Guys, make sure you hit the like and subscribe on the way in. It's absolutely free to do, and it helps the channel grow. We got 67 people watching. We have, drum roll, please, 28 likes, guys. Smash the like button. If you're here, you're watching, you're enjoying the content, you're chilling, you're hanging, banging, and clanging with me here on Venice Boulevard, brother, then there's no excuse why you can't hit that like button. Dave, what's up, man? What it is, brother, man? What it is? Funky. What's happening, brother? Where you been? Good to see you, my guy. Good to see you. All right, so fill the CME gap. closed above 96. We should be good. Now, we did reject off the 100-day. I talked about the 100-day this morning, and we did reject off of it. We wicked above it briefly to about 97,957. So close to 98,000. So close. What am I anticipating? Probably a correction down to 95.4. Maybe build some support there. If we lose that, then probably 94,000 even. That's where I would expect to build some support. Now, the thing is, guys, that's healthy, right? We want to do that. We want to come back down, whether it's today or tomorrow, here or even here, right? And then move up. And the reason for that is, well, we got our low. We have our higher low, higher low, higher low, higher low, right? You want to continue to put in those higher highs and higher lows. We want to continue the upward trajectory until otherwise stated, right? So very bullish. Even on a minor correction back down as far as 94K would still be us just putting in another higher low on the weekly time frame. So that's what you want to see, guys, right? Nothing can go just straight up without making support levels, right? That's what you want. James, what's up, buddy? I am actually right on Venice Boulevard. Nice. Man, there are so many sunglass shops on Venice Boulevard, on Venice Beach. It's absolutely crazy. Absolutely crazy. I've been here every day, just quiet, non-chat. Oh, I see. Hey, as long as you're here, brother, I'm glad to have you, man. Big Mike, supporting the channel. As always, my dude, my brother, he says, BTC's getting weak, Big Rob. 94K in sight before blast off. Your thoughts? Appreciate it always, brother. Whoa, what a coincidence. I was just talking about it. Yeah. Nice little correction to confirm 94K as support would be perfect. That would be absolutely perfect, as we have not been above 94K since we fell below it back on November 17th, right? We got some static, tried to break through it here in December. We failed. Then we collapsed down. And boom, there we go, right? I mean, some people argue that we got a little bit of a cup and handle here, right? Cup, handle, boom, right? And it's valid. It's valid. Nice little breakout. Either way, guys, little correction down and then boom, right? That's what I'm projecting. Let's go, Miria. Hell yeah, brother. Hell yeah. Let's go, Miria is right. All right, let's get into the news, guys. I don't know how long my voice is going to hold up, but we shall see. Let's dive in. Let's get into a clip right off the bat here. A little clippy clip. This is shocking. SEC Chair Paul Atkins says all U.S. financial markets could transition to blockchain-based trading within the next 2 years. If that happens, Bitcoin's going above 1 million is absolutely on the table. Absolutely. Check it out, guys.
Tokenization is the idea of using then smart contracts or tokens on chain to be able to that represent, say, an underlying security. And so then that tokenized security is a security and would be subject to SEC rules by law. But the idea is that if it's on chain, on a blockchain, then there's much more transparency as to where it is. Right now, there's a bit of opacity as to who owns what and where the company usually doesn't even know where its who its shareholders are, and where the shareholders reside, where the shares reside. So tokenization has the benefit of potentially having, instead of T+1 now trade date +1 for clearance and settlement, the prospect of maybe T0 now, depending on the instrument. And we have to think about netting and all sorts of other things with respect to some instruments. But in principle, the idea of on-chain delivery versus payment and receipt versus payment, DVP, RVP on-chain, is a prospect of de-risking the markets, making them much more transparent and then sure as far as clearance and settlement, because it's always that the gap between clearance and settlement and then delivery and payment is the real introduces risk into the system.
Do you expect this is where financial services is going? Are the major banks and the brokers out there today moving increasingly toward tokenization?
Oh, absolutely, and it's the way the world will be. Here in the, I mean, maybe not even in 10 years, maybe even a lot less time, maybe a couple of years from now. So I think that all of this modernization of the markets, I think, is good. And the trouble that we've seen here over the past few years is that the SEC, unlike historically, it never was necessarily at the vanguard of pushing new innovations. It was always a little bit behind the market, of course. But here recently, it's been almost standing athwart the marketplace, and as it's as all these new innovations were coming about. So that's no more. We're actually embracing it, and I believe that we need to be embracing it to keep the United States at the forefront as far as cryptocurrencies and whatnot. There were really only 2 countries in the world here in the last few years that were working to make cryptocurrencies illegal, and that was communist China and the U.S. through the SEC. So that's changed. It's a new day now, and so we want to embrace this new technology.
It's a new day now, guys. Yes, I do believe we will see a $1 million Bitcoin in the future. That's why I never sell, guys. That's why I never sell my Bitcoin. Check this out. Midnight, just in, Coinbase will launch perpetual futures trading for Midnight's Night token. Trading goes live tomorrow, January 15th. Cardano's native token for trading on Coinbase. History in the making. Now, people asked me, I talked about this over on the Patreon, and people asked me what this meant. Well, what it generally means is usually when in a major exchange like Coinbase or Binance lists a project on perpetual futures, it's usually a precursor to a spot listing on the exchange. So usually. So I wouldn't be shocked in the near future here, maybe the next few days or a few weeks, to see a spot listing of Midnight. So absolutely bullish AF, man. Bullish AF. Let's go. What else do we have? I wanted to cover this story here. Brian Armstrong. So someone asked me about this on the Patreon Live today, so I said I would cover it here. So according to Bitcoin Magazine, Coinbase CEO Brian Armstrong says Coinbase cannot support the crypto market structure legislation as currently written. He said, "We'd rather have no bill than a bad bill." So check out Brian Armstrong's tweet. He said, after reviewing the Senate banking draft text over the last 48 hours, Coinbase unfortunately cannot support the bill as written. There are too many issues, including a de facto ban on tokenized equities. That's a big no-no. DeFi prohibitions, giving the government unlimited access to your financial records and removing your right to privacy. Another big no-no. Erosion of the CFTC's authority, stifling innovation and making it subservient to the SEC. We saw how bad that went with Gary Gensler in charge. And draft amendments that would kill rewards on stablecoins, allowing banks to ban their competition. So basically, again, we've talked about this a lot, guys. Banks continue to lobby Congress to stop exchanges from being able to give yield or interest on stablecoins because that destroys the banks, right? It hurts them because here's the thing, guys. Banks, it's not that banks cannot afford to give better interest on your fiat money in your accounts. It's that they don't want to, right? They wouldn't go under if they had to offer, 3%, 4%, 7%, whatever exchanges are offering. Banks could ask to give the same yield on your fiat there, but they don't want that. They want to, instead of increasing the yield you get on your fiat in the bank, they want to decrease the amount of interest you get on your stable coins on exchanges, screwing you over the customer, right? So I don't blame Brian Armstrong for his position here. We appreciate all the hard work by members of Senate to reach a bipartisan outcome, but this version would be materially worse than the current status quo. So if this bill passes as is right now, it would make things worse for crypto, not better, right? We'll keep fighting for all Americans and the economic and for economic freedom. Crypto needs to be treated on a level playing field with the rest of the financial services so we can build the industry in a safe and trusted way in America. And I agree with Brian Armstrong's position in this, guys. I mean, you'd have to be crazy not to. It's pretty simple, right? But let's continue on to an article covering it here. So, Coinbase pulls support for the crypto bill. No bill is better than a bad bill. Major U.S. crypto exchange Coinbase says it has withdrawn its support for the Digital Asset Market Clarity Act, with CEO Brian Armstrong arguing that it would cause far more harm than good in the crypto industry in its current form. Quote, this version would be materially worse than the current status quo. We'd rather have no bill than a bad bill. We already covered that. Armstrong flagged several concerns, including what he described as a de facto ban on tokenized equities and sweeping restrictions on decentralized finance, arguing the proposal would grant the government unlimited access to financial records and raise serious privacy risks for consumers. He also argued that the draft takes power away from the CFTC, slows innovation, and hands more authority to the US SEC, which is a major concern for the crypto industry, given the SEC's regulation by enforcement approach under Biden's administration. Here's the thing, guys. Here's another factor in that, okay? So the CFTC, as we all know, as you guys know as Americans and everyone else who doesn't know, so the CFTC is in charge of overseeing commodities like crypto, right? The SEC, as you know, is in charge of overseeing securities, right? Giving less power to the CFTC and more power to the SEC doesn't make sense, because you're giving authority to an agency who oversees securities to oversee crypto, which is a commodity. It doesn't make any sense, right? So yeah, there's that. Continuing, Armstrong also echoed a fear shared by many in the industry that the current draft would kill rewards on stablecoins and is designed to shield banks from competition. Bank lobbyists have warned that offering users roughly 5% risk-free yield on stablecoins could trigger a deposit flight, with billions pulled from low-interest bank accounts. Well, that's your problem. Offer better yield and people won't leave, right? ETF analyst James Seifert commented on Armstrong's post saying, this is, quote, not what we want to see or hear with regards to clarity. This industry needs a market structure bill. However, Armstrong is hopeful lawmakers will ultimately reach the right outcome, a sentiment shared by other executives across the industry. Ripple CEO Brad Garlinghouse said he remains optimistic that issues can be resolved through the markup process, a massive step forward in providing workable frameworks for crypto while continuing to protect consumers. Garlinghouse said, this bill's success is crypto's success. The Senate Committee on Agriculture, Nutrition and Forestry has set a January 27th for its markup hearing, 6 days after the release of the legislative text on the 21st. So, guys, probably going to live stream that on the 27th, that hearing. So keep your eyes on that. That's That's the day after I get back from Arizona. So yeah, I'll probably live stream that if you guys are interested in watching it with me. That would be a fun little time. We used to live stream all the congressional hearings whenever like Gary Gensler would testify and stuff like that. It was because it's fun to watch him squirm, right? So, okay, what else do we have? Let's get into the chat a little bit here, shall we? Marcus, what's up, man? Can you check out this new Zebek card partner, a privacy token? Dropped a couple weeks ago. I need, what's the ticker, man? If you give me the ticker, I can look at it, but the address doesn't help me. I'm thinking some of these senators or congressmen have been bribed by the banks. Oh, absolutely. Elizabeth Warren is at the front of the line. 100%. 100%, man. All right, what do we have? Silver price nears $100. Analyst says this is the start of a financial crack up, not a bull market. Let's check it out, guys. What you talking about? What you talking about? Silver prices pushing towards $100 mark may look bullish at first glance, but not everyone is celebrating. Macro analyst known as No Limit warned this week that the move higher in silver and gold could be signaling something far more serious than a normal commodities rally. In a widely shared post, the analyst argued that what markets are seeing now is not a healthy supercycle, but growing stress in the global financial system. This is not bullish, he wrote, adding that similar conditions in the past were followed by sharp declines in equities. He sounds like a perma bear that's whining because he's not getting his own way. The core of the argument is simple. Investors are not buying gold and silver because they expect strong economic growth. They're buying because confidence in traditional assets is fading. The US dollar is under pressure, bond yields are rising, and long-term faith in government debt appears to be weakening. According to No Limit, large players are exiting bonds aggressively. That selling pressure pushes yields higher and forces the Federal Reserve into a corner. If yields rise too far, the Fed may be forced to step in and buy its own debt to stabilize the market. Historically, that kind of intervention has meant more money creation. Turn the frickin' printers on, I say, right? That expectation alone is often enough to push hard assets higher. Silver's rapid rise is important because it tends to move later and faster than gold. When the gold to silver ratio starts compressing, it usually signals rising stress rather than calm optimism. No Limit believes silver still has room to run, but not for reasons investors should feel comfortable about. This is how crack-up booms start, he warned, referring to periods when asset prices in normal terms rise in normal terms while purchasing power falls. If those environments, stocks, metals, and even real estate can move higher on paper while everyday affordability gets worse. There's a growing divide in how investors interpret this move. Some see silver near $100 as confirmation that inflation hedges are working. Others see it as a sign that capital is fleeing risk in search of anything tangible. History supports both views, but it also shows that these phases tend to come with extreme volatility. During previous episodes of the bond market stress, equities eventually struggled, even if they initially rallied. Let's go have a look over at the silver chart, guys. I have it queued up here because I put in a box about a week ago up here, as you can see, where I said that we were going to see silver rise into between $90 and $100, right? And we got there, right? We got there. Silver got all the way up to $93.84 before collapsing back down, currently at $88.81. I think that $100, though, is going to be a very, very strong psychological level, right? It's going to be hard to break that top of that range there at $100. I think we're going to eventually come back down to around $50 to $55 when we do see a correction in silver. If you're looking for an entry point, that would probably be your best bet. But yeah, so silver, yeah, doing exactly as we expected. We called that about a week ago. Very nice. Yes, you like it. You like it. Let's get back into the chat just a wee bit here. Some say if they rule against the tariffs, it's $133 billion that the U.S. will have to pay back, and it will hurt the bull run because it will take liquidity out of the markets. I see the argument, but Scott Bessent said that they still have all that money and that they wouldn't need to pull money out of the markets, right? So, I mean, he could be lying. I don't know. But I think in the big picture, I think that if they rule, well, not if, when they rule against the tariffs, I think that we'll see a slight dip followed by a bigger run to the upside, because I think in the big picture it's more bullish for the markets to have that. Because listen, the tariffs cause uncertainty. Smart money does not like uncertainty. A ban on tariffs from the judges gives a little bit of certainty, right? Sweet man pulling up the silver chart. Hell yeah. I think the FBI should investigate if they took bribes. Crypto was designed to be an alternative to bank. Yes, absolutely. I agree. They never will, but I agree with you 100%. 100%. All right, what else do we have, guys? Let's keep this rolling along. You guys will love this one. All right, altcoin dominance bounces back, signaling a potential run in 2026. But before we get into it, we have 109 people watching, guys. We have 56 likes. Get those likes up, my friends. Let's go. Let's freaking go. Okay, let's get into this piece here. What do we got? Altcoin dominance has shown a potential turnaround as it bounces off a key historical trend line. This pattern mirrors similar occurrences in 2018 and 2022, which were followed by significant altcoin rallies. As you can see on the chart, guys, the altcoin dominance, every time it's touched this bottom trend line here, this bottom trend line, you can see my cursor, right? Right here. Look at the move up. Look at this potential move to the upside here for 2026 on the altcoin dominance chart. That is massive, juicy even. According to analysts, Bitcoin Census, the altcoin market could be poised for another major run, particularly with the dominance of altcoins rising. The trendline bounce suggests that altcoins may soon outpace Bitcoin and regain market share. Bitcoin dominance has been a dominant force in the markets for some time. However, historical trend suggests that when altcoin dominance bounces off the trend line, it's seen in the chart, a phase of altcoin growth may be on the horizon. The RSI has also shown signs of significant shift, breaking a multi-year downtrend. The RSI breakout is viewed as a key indicator of momentum changes, signaling that altcoins may soon enter a new bullish phase. When the RSI breaks the downtrend, it often marks a turning point, suggesting increased buying pressure and positive momentum for the asset class. As the market reacts to this shift, the chart predicts that altcoins could experience a major surge through 2026. This potential altcoin season, marked by increasing dominance and RSI upward movement, could lead to a significant rally for altcoins. Are you ready? Let's freaking go, baby. Gain, what's up, buddy? Will Iran and US affect the markets? Not unless something drastic happens. You have to remember that Iran doesn't exactly have one of the largest markets in the world, for one, and for two, oil's not really much of an issue after the Venezuela situation, so I wouldn't think so unless something more violent starts to happen. I don't think so. Stock market was down. Yeah, there's already a decoupling. I mean, the stock market's been going up for a year and a half, and crypto hasn't really, right? So I wouldn't even say it's really coupled right now anyway. Gengar, Crypto J505, 50 push-ups. Let's go. Passenger, what's happening, man? When Binance and Coinbase for Zbeck, they informed season listings 3 months ago. Let's go. I agree. Let's effing go, my man. Let's go alts. Absolutely, man. Absolutely. Let's keep this rolling, guys. We got your favorite politician ever, Elizabeth Warren, on Squawk Box today, guys, talking about her relationship with Trump and much more.
Trump reached out to Democratic Senator Elizabeth Warren for a conversation that the White House called productive. Joining us right now with the details of how that conversation came about and maybe some areas where they can work together is Senator Elizabeth Warren. She is the lead Democrat on the Banking Committee. And Senator, thank you for being with us. It almost sounds like a Saturday Night Live skit that the two of you actually spoke and had something that the White House called productive. First of all, how did this conversation come about? It was after a speech that you had given that was actually pretty fiery.
That's right. I had just given a speech about the future of the Democratic Party. And the basic point that I made in the speech is that Donald Trump had promised for an entire year in the run-up to the 2024 election that on day one, he would lower costs for American families. He gets elected. And the very first interview, he says on day one that he will lower costs for American families and that's why he got elected. And yet here we are a year in, and the cost of groceries is up, the cost of utilities is up, the cost of housing is up.
First off, I just want to say, whenever a politician says on day one, and this isn't unique to Trump by any stretch of the imagination, it's a figure of speech, right? He doesn't literally mean on day one something's going to happen. You don't have time to do anything on day one. It's a figure of speech, Elizabeth. Excuse me, Elizabeth. You've got a little bullshit in your teeth. Want to wipe that off.
The cost of healthcare is up. And all of those costs are up because of policies that Donald Trump and the Republicans in Congress have pushed on our economy. So the argument I was making in the speech is it's time for Democrats to jump in to hold Donald Trump and the Republicans accountable for these higher costs for American families, and then make a choice as we go forward. We can take our economic agenda and sand it down, narrow it down to make it more acceptable to billionaire donors, or we can actually go full-throated on behalf of the American people and make bold proposals and demonstrate that we will get in there and fight for them. But this was all about lowering costs for American families because that's what Democrats are going to do, and that's what the election of 2026 is going to be about.
So shortly afterwards, you get a call from the president.
Yeah.
Were you surprised? What happened?
Yes, I was surprised. In fact, I did not recognize the phone number. So the question then is, he raises the point about a cap on credit card interest rates, something that had come up in the speech and that I've been working on for years, and that is trying to get interest rates down. And he said he wanted to work on that. And I said,
if you've been working on this for years, like you say, you must be pretty bad at your job that you haven't gotten anywhere with it.
Great. Let's get something done, because my point was, and I had made this point in the speech, he had not lifted a finger to try to get something through on credit card interest rate caps. And then while I had him, I said, there's something else you could do just right away. We need to bring down the cost of housing. And the way we do that is to increase housing supply all across this country. We're 3 million units of housing short. And we need urban housing, rural housing, housing for first-time home buyers, housing for renters, housing for seniors, housing for people with disabilities. So I had worked with Chairman Tim Scott, the Republican chair of the Banking Committee. We put together a bill that had 40 proposals in it, every one of them aimed toward increasing supply, making it easier to get approvals, more on manufactured housing, passed the Senate unanimously, and yet goes over to the House, and the House Republicans won't move it at all. Gets tangled up over there. And I said, Mr. President, you want to help bring down the cost of housing? Light a fire under your House Republicans, get them to move this bill. Let's get it signed into law, and let's get started now on a first step on lowering housing costs. So
Senator,
we have a lot to talk about.
I want to go back to credit cards just for a moment, because there is a study by a professor at the University of Pennsylvania's Wharton School suggesting that a 10% cap could make up to 80% of customers of credit cards in America unprofitable at the current lending rates and credit limits, which suggests that there would be a meaningful reduction in the amount of credit potentially made available to customers if something like this were to go into effect. What do you make of that?
Well, first, obviously, I want to take a look at their data, but I also just want to start with the big picture here. Is there anybody defending 36% interest rate on credit cards or 28% interest on credit cards? Anybody out there who isn't paid by the industry that's putting out those credit cards? And do keep in mind right now, there are a lot of community banks, there are a lot of credit unions that are putting out credit cards at much, much lower interest rates. But what do the credit card company giants say? They say, oh no, you can't touch credit card interest rates. No matter what, it will be the end of the world. We will shut down credit cards. They go on and on and on. And basically, it's the same song they sang over what would happen if the CFPB put some caps on overdraft fees. What would happen if the CFPB put caps on fees on credit cards? You know, the credit card companies literally make billions of dollars. Last year, they made $150 billion in profits off the credit cards that American families are holding. So we have some choices to make. Do the investors and the corporate executives keep that $150 billion, or does some chunk of that go back to hardworking families who are just trying to pay their mortgage, just trying to pay for groceries every month?
Senator, cumulatively, prices rose 22% in the Biden administration. So much, in fact, that real average wages were lower when Biden left the office than when he came in. Inflation was today 2.7%. It's still too high, obviously. But how are you blaming Trump's policies on the affordability crisis when you're talking about 2.7% versus 22%?
Well, let's talk about what's happened. And that is that Trump's tariffs have driven up prices. Trump's chaos from the tariffs and other changes have driven up prices. Trump's energy policies have driven up prices. Price of utilities, take a look around. And Trump's decisions, along with the Republican Party, to cut access to health care has driven up the cost of health care for some families double and even triple. So we're talking about Trump policies that have driven up costs for American families. You know, just pick one little piece out of that. Have you observed what's happening to home mortgage foreclosures? Do you know that since Donald Trump was sworn in, home mortgage foreclosures have gone up 21%? So yeah, there have been a lot of policies that Donald Trump and the Republicans have been following for a year now, and it is showing up in the costs that people pay.
I was trying to do the composite of putting everything together instead of picking individual things, and that's 2.7% versus a high of 9% during the Biden administration.
Look,
Oil's
down.
At least most prices don't drop, Senator. You know, the Fed looks for a 2% inflation rate. That's the target. So prices continue to rise every single year because we don't want deflation. So 2.7, while not great, is nothing close to what we had under the Democratic administration.
You know, Joe, what you should do? You should go lecture to every American family around the country.
Oh, come on.
Who is saying they feel under enormous economic stress. 80% of Americans say, I'm worrying about whether or not I can make it to the end of the month on my paycheck. I'm worried about whether or not I can send my kids to school.
They were saying the same thing in the Biden administration. That's not unique to Trump's administration.
I'm worried about whether or not I will ever have a chance to retire. American families are mashed to the wall on prices. They are not able to take their paychecks and stretch them far enough and build some real economic security. And part of that is because Donald Trump, in the 1 year that he has been in office, after promising how many times during the election? At least hundreds of times, promising to lower costs on day one. The costs that families have to deal with up close and personal every day, those costs, groceries, utilities, housing, healthcare, those costs are up. And it's putting a squeeze on American families. You can go tell them it's not, but I don't think they're going to believe you.
I'm trying to read the room here. Do you get the sense that you and President Trump will actually be working on things together, or do you think that this was just talk and that no action will come of it?
I don't know. You'd have to ask Donald Trump. I'm ready.
Asking your perspective on it.
Ready to go. I've got the legislation ready to go. We've got the housing bill that we've already gotten all the way through the Senate. I've worked with every Republican to get that done. My job is to do anything I can to lower costs for American families. And the Democratic Party is ready to go. We stand behind that.
Hang on. She just spent like 4 minutes talking about how Americans are mashed up against it because they can't afford to live. And then she just said in the same breath that it's her job to make things cost less. So she's failing at her job, is what she just said. Right? I can't even with this woman. Rodney. Thank you, Rob. I didn't know anything about crypto 2.5 years ago. I made money on Jasmine. Then I took that and made a whole lot more on XCN. Thanks. Now I know crypto. Thank you, Rob. Hey, that's what I like to hear, brother. That's what I like to hear, man. Pocahontas, yeah, she's such a grifting. Yep. I'm a silverback gorilla. Nice. Can you do the rest of the show? You guys probably would tune out if I did. Pocahontas belongs in them. Yeah, no kidding. Can't stand her. Yeah, she's straight garbage. 100%. 100%, guys. She needs to get back to the TV. It's a wonder that Mr. Warren is a heavy drinker. No kidding. No kidding. She's got the bill ready. The credit companies are paying her to push. Yep, exactly. She's got the bill ready that the banks are like, hey, push this bill. Yeah, so look at that, guys. Look at that. Let's go have a look at Bitcoin. What are we doing? Well, like I said earlier, guys, probably a pullback down to about 95.4. If that doesn't hold, probably down to about 94 even. Not bad. Rejection off the 100-day moving average. I'll take it. Let's dip down to 94, solidify it as a support level, and then move up, put in a higher low, and continue up. That's what I'm watching for, guys. But for now, I got to get out of here. Make sure you get over to our Patreon community, guys. We are doing a lot of big things over there. I'm excited about what we're doing in 2026. If you need help with your portfolio structure, exit strategies, profit-taking plans, or anything else, we're going to be dropping more gems over there. We got daily trades. You can book one-on-one coaching calls, join our group coaching calls, or check out any of our exclusive Patreon-only content. Check it all out over there, guys. The link is in the chat. It's in the pinned comments. It's in the description. Click like if you like this video. Click subscribe if you really liked it. I'll see you in the next one. God bless.